The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 16th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because you and I, each day, we must live up to our potential. So let's begin our day with an empowering belief system. Beliefs, they have the power to create and the power to destroy. You and I, we have that awesome ability to take any experience of our lives and create a meaning that either disempowers us, don't do that, or one that can literally save our lives. Think about it like this. There is only one thing, that's what Curly used to say on that movie, right out there. I forget the name of the movie here. But there's only one thing that you can control in your life, folks. That's the cool thing. There's only one thing that you have to worry about. Only one thing that you can control. And that is the meaning that you give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity. One, a buying opportunity. Your beliefs, the meaning that you give to events, statements, criticisms, whatever it is, you, only you, are the one in control of that meeting. Pretty cool when you think about it, isn't it? Because what you and I can or cannot do, what we consider possible or impossible, is rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters. And it matters because all personal breakthroughs begin with a change in beliefs. So, the question is always, how does one change? I found that the most effective way to change is to get our brain to associate massive pain with that old disempowering belief. We must believe at the deepest level that our disempowering belief, it has cost us in our past. And if we continue, it'll cost us in the present. And ultimately, will only bring us pain in our future. Now that, folks, that is no way to live. Sometimes knowing what we don't want is just as important as knowing what we do want. I think knowing both is key because once we rid ourselves of our disempowering belief system, we can then associate tremendous pleasure to the idea of adopting a new empowering belief. And lastly, you and I, we must know that at any moment, a decision that we make right now, right this very second, it can change the course of our life forever. The very next person we speak to, stand behind in line, sit next to on an airplane, next phone call we make or receive, the very next movie we see. Maybe it's a book we read, a page we turn, a workshop we go to, such as the one that TFNN is hosting tonight. Any of these could be the single thing that causes the floodgates to open. And then all of a sudden, everything that we've been waiting for will fall right into place. That, folks, I love that belief system. So, let's go check out the beliefs in the market. Right now, the bulls believe this market is moving higher. We've got the Dow up 169 points. They're trading out at 15,337. They say, what, Congress? You don't need to worry about those boys, those girls out there. The S&P 500, it's up 18 points right now, trading out at 1716. NASDAQ up 37 points at 3830. Russell 2000 up 1% this morning, up 11 points, trading out at 1090. NASDAQ 100 up 28 points, trading at 3272. New York Composite up 1%. That's trading up 92. Net advancing issues 1559. That's important because the Bears did take back control of the market yesterday. We got a little tug of war going between the Bulls and the Bears out there. We've got a caller on the line. Let's go to Joyce in St. Pete. Joyce, thanks for calling. Thanks for holding. How are you this morning?
Very good, Steve. Thank you for taking my call. Steve, I have a question. I'm interested in trying to get into some of the housing and the builders. I was wondering, there's a few that I've been looking at, and I was wondering what your opinion was. There's BLDR and FRO.
FRO. Okay, let's go. So let's take a look at FRO. Now, is that Frontier Resources?
Yes.
FRO. Okay, so we'll take a look at FRO. Now, this is trading at $2. So I have the right stock out here?
Yes, FRO.
Okay, so we got FRO, and now, and this is, I haven't traded this equity. Tell me a little bit about the company and one of the reasons that you're taking a look at it. Is is it because of the price of the stock, or is it some other information or knowledge that you've got? Help me to understand why you're looking at FRO as one of the builder stocks.
Really, I don't have the information about the stock itself. I just look at the charts and the price too, because I don't have that much money to invest in any particular stock. And so I was trying to look at a lower price stock, but I wanted something that would be probably, a good stock to get into. Okay,
so let's do this here. Let's take a stock like Lennar. Let me see if I can actually do this here. Give me a moment. I'm going to try to that didn't work. Gosh, darn it. I don't know if I can. I didn't want to browse. Let me see if I can do this here. So I want to go ahead and put this in this window right there and say OK. That's not really going to prove the point out here, so let's skip that idea. Well, first, when we take a look at, let's just take a look at FRO, Frontier Resources. So what this does have, it has a couple of nice breakouts off of the bottom. So if you're taking a look, I would imagine since you've been looking at the stock here, June 17th, off of the bottom, nice wide price spread, accelerated volume, 6.5 million shares. The equity pulls back to the breakout area, and when you take a look at a breakout area, I like to go to the lowest volume bar just slightly before that breakout. That would have been the trading session of June 13th. That had 422,000 shares, and as it came back and it tested that area out, it did it with like 700,000 shares, a million shares, but really you're going against that 6.5 million shares. So comes back to the breakout area and then goes ahead and takes off. And now what's nice about the equity, and just taking a look at it here, Joyce, is that it had another nice day, wide price spread, accelerated volume, up at these highs, and what I'm referring to is the $3 area. Then it's pulled back. Now, what it also did, it kind of consolidated, went sideways, and then has another high volume high out here at the September 19th area, somewhere between 253 and 312. So from that standpoint, irrespective of what it is, what industry it's in or what have you, you've had some nice breaks. So I can see the reasons for you to take a look at it, because it's actually got volume at highs out here. And so now the question is, where's a good entry point on this, would you say? Is that what you're looking at? Or?
Yes, that's correct.
And what are you targeting as an entry point on this?
Well, let's see. It has a high at, I'm sorry, I got the wrong one.
No problem. Because right now what it's done here, it's pulled back to the $2.07 area. Yesterday's candle was a doji candle. They don't have a lot of meaning at lows out there. Some people use them as halfway markers. I basically use them as just simply the market's tired. Now, when a market is pulling back, you like to see that something is tired. So $2.07 is not a bad place to take a little bit of a position. What I would say is that the last three trading sessions, price has actually moved lower, and it's done it with somewhat accelerating volume. So this might make you say, you know what, it might be better for you to wait and see if this thing can come all the way back down to its lows again. It's done it the last three times, which would be about the $1.77 level. So the best risk-reward trade for you is to let this come back to about $1.77. And then as far as stops are concerned, what you'd really like to do is use the average true range. That means your stop should be equal to at least what this normally, the price moving over the last 10 days. And you can just go measure each of the bars from high to low out there, figure out what that dollar difference is, and you can use that as your average. And then what I would recommend that you do, Joyce, is you multiply that average times 1.272 or 1.618. That's a Fibonacci number out there. And then it's really all about your position size. So the way that you would trade this, you would figure out what your capital is, because you're going to create a position size the same way no matter how much capital as you have, or I would recommend that you do that. And that is always take 1% of your capital. That is all you're ever going to need to put at risk in a trade. And how that works, Joyce, is like this. If you have $10,000, that says you would only risk $100 on the trade. So if your stop ends up being, in this case here, let's say that it's I'm going to use a 50-cent stop. It's not going to be a 50-cent stop in this case here because that would be too wide, I would think. But if you have $100 and your stop is 50 cents, this says you would go out and you would buy 200 shares. So you're going to take your $100 and divide it by your stop, and that's going to tell you how many shares of this equity, and it would work the same way if you were trading a $1,000 equity. You're still only going to risk that $100 or 1% of your working capital out there. So position sizing is actually more important because that's the money management aspect of trading than trying to find a stock or what have you. So that's how I would take a look at Frontier, and if this thing pulls back to $1.77, if I'm not watching it, heck, give me a call because I might fly with you. I might hop in the back seat with you out there. So, especially with these volume bars at the high. But what I don't want you to do is take a look at a low price stock and then back up your truck. Because that's good money management. That's just asking for potential trouble out there. Now, the next one that you wanted to look at was BLDR is the ticker symbol. Tell me just a little bit about them while I pull the stock chart up. Go ahead.
It's just because of the builders and the housing. They had a good run, and apparently, we're hoping, or it seems like maybe the economy has changed, and they will be also increasing in their value.
Sure. Now, I like this stock chart the way that I look at it a whole lot better. It's got a nice little uptrend that it has been in versus Frontier, which has primarily been in a downtrend. Now, I do like, for the reasons that we took a look at that stock, I do like the way that Frontier looks. If you're looking for an entry point in this, what I would say is you had a nice little breakout a couple days ago, October 11th. And if this thing can pull back into the lows from October the 10th, somewhere around 563-ish or so, and it can do it with light volume, ideally you'd like to see it do with less than 250,000 shares, but you're really benchmarking 836,000 shares out there, then that would be an area for you to consider taking a look at a trade here. If I take a quick look at a trend line, see what it has. Sorry about that. This thing also broke a trend. Even though I got my channel lines out here, and it's back inside it right now. That's not really the price channel out here. It would be a little bit lower. So let me just actually try to find the price channel for you if I can do this here real quick while we're on the air. So here's probably the price channel. Let me go backwards on this. This is just how I am quickly able to identify a price channel. Oh man, I grabbed the wrong tool here. 10 seconds of trying to do this. I tell you what, Joyce, as opposed to try to worry about the mere fact that we're going to break, would you be good enough to hold through the break?
Oh, absolutely.
Okay, so we come back, we're going to go take a look at the BLDR is the ticker symbol for Joyce in St. Pete, which broke this descending price channel, and it did it with accelerated volume. 877-927-6648. Dow's up 172. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 172 points right now. S&P is up 19. We're on the line with Joyce from St. Pete. We're taking a look at a couple of equities for her. The one that we're looking at right now, the ticker symbol is BLDR, Builders First Source, Inc. out here. And so, Joyce, I've got the stock chart on my screen. During the break, went ahead and put a couple other patterns here and tried to find where some areas of resistance and support are. So it's the weekly chart that I've got on my screen here. And you can see that coming off of the lows back in 2011, October 2011, been in a real nice uptrend out here. And I would consider the bottom of this blue diagonal line, if you're watching this on Tiger TV, is the real support area, the diagonal support area. So if this equity pulls back, if you're looking for where to maybe come in on this equity, I would say, one, if it pulls back, and the price that we're looking at here for BLDR is probably like around the $5.70-80 range. You're at $6.20 right now. What I also want to show you is that this diagonal price channel that it's in, it's also acting as resistance, as it's kind of doing this little stair step up along the way. And it's also running into some, you're going to have some horizontal resistance. So if you're looking for a smooth plane ride, you're not necessarily going to find it here. And the reason is, it's a weekly chart, so it affords us the ability to go all the way back easily to 2009 and take a look at a big downdraft from September 11, 2009. And believe it or not, there's still folks that are inside this equity that are holding it from that time period. So when the equity moves all the way up into that range, which is the high of the range is 830, hasn't been up there yet, you can expect that folks are going to say, hey, boy, I just want to get my money back. And I've had that feeling before. I don't know if you have, but, get into a bad trade and all of a sudden the trade becomes an investment. So there are folks that did that, and that's what we're seeing here. We're seeing that area as well as this high-volume downdraft, believe it or not, from 2007 that's still holding this in place. That had 4 million shares back there. That doesn't mean that it's a bad equity. It just means you need to expect it to bounce around, go from highs to lows. Now, on the weekly chart, what's nice here is that all of these high-volume bars that we're seeing now, they're really all high-volume bars to the upside. So as long as this is one of those equities that you want to hold, for a while, and it's okay to, it's going to get up to a price and then it's going to pull back, then this is a good one. But you still got to do the same thing with it being a $6 stock. And I want to show you again what I mean by that. I'm just going to make an assumption. Let's just say that you bought it at $5.80. And is this something you're looking to hold on to for a while because of what you believe in the housing business?
I've always believed in holding on to stocks, and that's been my problem. And I realize now that it's just an up-and-down market all the time. And it's hard for me to sell because I'm afraid I'm not going to get back in at the right time. And then I just don't seem to get in at the right time. But I see the high there, and I see what you're saying with the resistance. And maybe the best thing to do is when it gets to the high and see if the volume's not really high, that maybe I should just probably sell it and wait until it goes back down again.
Well, what's great, and thanks for sharing, with all of our listeners out there, because you're not the only one that experiences that. And so here's my recommendation. When you get into a trade, any trade that I ever get into, I have my stop and my exit in place. And that way I'm able to walk away from the screen, let the market do what it's going to do. I can't, I know that I can't control the market. And when price gets up to my target area, I'm out. And it doesn't mean that you can't get back in, but there's nothing like taking. There's nothing. What I want you to do is change your focus to not worrying about can this thing run higher, but you want to really run this, and you want to create a money machine. You want to, and the easiest way to do that is to pay yourself. You got to treat this business just like any other business. A lot of times, and I'm a big entrepreneur, and so the first businesses I started, I made sure everybody else was paid before myself. And there is some psychological switch that when you're starting to take money out of the business, that everything just changes. And so, in this case here, there's an A to B equals CD pattern up in the $8 area. And I'm just going to put this up on the screen here because it's all about position sizing. So let's say that you got in right now at about, we're going to say it's around 580. So I'm going to put this up on the screen here. It's a BLDR is what we're looking at. See if I can get this done here real quickly. And it's a stock. It's got a 26 cent average true range on this. Let's say you had $10,000 in capital, and we got in. I don't remember the price. I'm going to say it's $5, and I'll just say $5.50, and we're going to get out. I think the price range was about $8. So this is going to help you to calculate what your stop would be, how many shares you would buy. This would say you could buy about 250 shares. If you got into $5.50, your stop would be $5.08, and your target would be that $8 range, and it would be like a 6-to-1 reward to risk. I would have your stop in place and your exit in place all at the same time. All right, Joyce?
Yes, I appreciate that.
You betcha. Thanks so much for calling. Have a great day and a great week. We'll be right back. We're going to go out to Lou in Nashua. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 163. Let's go out to Nashua, New Hampshire, to Lou. Lou, thanks for calling. Thanks for holding. How are you today?
Very good, and you?
Excellent. Thanks so much for asking. You wanted to look at the December contract for natural gas. Tell me what you're doing, how I can help you.
I was in it, and I got stopped out. I'm just wondering when the next entrance would be, or if I should get back in here.
Yeah, well, it's this has got a nice A to B equals CD that is unfolding here right now. So the next area of resistance that it needs to clear on the December contract is going to be the September 19th high, and that's not that much further away. That's at $4.04. You're at $3.99 right now. I don't see anything at this stage that is in the way of this moving up to the 420 level. It's even giving some pretty decent signs right now that 435 is in the cards for it as well. It's a nice looking stock chart. That the swing point September 19th that had 28,000 contracts, and you came into it yesterday with 56,000 contracts. So it's going to at least go test that high, but it looks more likely what it's really doing, Lou, is it's setting up to go ahead and move up to those highs out there. So if you're gonna come in, if you were in a profit position, you just had a stop and you got stopped out, and the same principle really applies that this was a good trade then. It looks like it's a good trade, now as well. So that's how I read it. I don't see any continuation pattern or anything else to trade off of. I like the trend that I see inside this contract for sure, and it's really done everything that it was supposed to do. If it pulls back, it'll pull back and try to trend and test the trend lines out there, or the channel lines. But right now, it looks like it just wants to complete the A to B equals CD up.
Right, and if it pulls back, where do you expect it would go?
I would say, you could probably take a look at yesterday was an example of that. If you got a stock chart on it, what I would do is I would just draw a line extending from the high of May 1st. That high is 474, and I would just use the high of the session from September 19th, and it might come back and test that area and then take off again. If that area doesn't hold, it could always come back and test the channel line, which is using the open of the bar from May 1st, and then using the open of the bar from September 18th, and that's an area that it could come back. It doesn't look like that's what it wants to do right now. For this to move sideways and maybe pull back slightly for a day or intraday, I can certainly see that happening. But so far, it looks really darn good. It's a nice looking stock chart. Nothing bad that I can find on it.
Okay, super. Thank you.
All right. Hey, thanks so much for calling. All right, folks, so we've got the markets that are truly moving out here this morning. And let's go into some of the intraday charts. Oh, I didn't mean to do that. That's on a different screen. But I want to go to the futures contract because there's a rising price channel, so we're not anywhere near the top of that. Volume, big volume in the last two half-hour trading sessions. Coming in at 10 o'clock, we had 321,000 contracts. That was taking out the most recent swing point high here from 8 o'clock in the evening. We don't have to worry about the volume back there, but let's come all the way back here. And it's going to be too hard to see. So if the volume bar, let me do this. I've got to just move it sideways, and we'll go find that volume bar. We'll go shooting. So here's the Ben Bernanke volume bar. And the price level here, it had that had 492,000 contracts. The high of that bar, this is a 30-minute chart we're looking at, is 1717. So 1717, that was on September the 8th, and 492,000 contracts. I just want to see where we're at right now. The low of that was 1695. I know we're well above that. Now I'm going to come all the way back. Well, I can draw a line. Why don't I just why don't I do that? Silly. Of course, I need to draw a line and actually connect it to the right spot. Let's do it from the swing point high out there. And let's just draw a red line across the September 18th high, which is 1723 out here. We'll make that one a red line, not for any reason other than just to differentiate the color. And now let's pull back and see where we're trading into right now. Okay, so we're not up at those highs. So that black line out here, which is the price of 1717, which is the high of that high volume bar, but you're pushing up into it. 1695, so you're inside that bar right now, and you're really pushing up into that bar with some pretty decent volume out there. 321,000 contracts out here. So that is looking pretty good. We're at a stage here, if we take a look at that 30-minute chart, because this is really it's a great EKG of the system of the stock market. Now I can't tell you why, but I can tell you that it is. And that's a good thing. And every time that relative strength index, that 14-period relative strength index gets above that 70-ish range out there, that's a positive. But the negative, if there's a negative, it's not really a negative. It's that you should expect the market to work off what is a overbought condition. And it does that by moving sideways. So it's very easy here, still weird, wacky, Wally. It's not really Wally, but Washington, D.C. Wednesday out here. The most bullish thing is that this overbought condition just simply works itself off by moving sideways. If that's not the case, then the next area of support that you got to pay attention to is that rising price channel here. We during the first hour, I won't go through all the details right now, but during the first hour, I think I covered all of the hammer candles and bullish engulfing candles and everything that is now formed along the bottom of that price channel. Enough to now make me say, okay, this is real. And it's a real price, and it is a really solid price channel. And a part of that was because of that bullish engulfing at 830 and that wide price spread that we saw coming off of that level. And that's important to know in trading here, because if it just pulls back, like Lou was asking, hey, where's a good place to enter here? Well, guess what? if the ES Mini can pull back to the bottom of that price range, do it on light volume since you already had 321,000 contracts, and that level holds, that actually would be an area to go ahead and take a long position. Likewise, if it busts through that area, that's telling us that, you know what, this solidly anchored price channel here, it's not the price channel that's the problem. It's the market that's giving us some other clue that says, hey, maybe the short side is the place to be looking at. So I know my system froze here, but so it did. Let me try doing that. Nope, that's frozen too. There's a way to be able to unfreeze it. So that's on the ES Mini. That's where we want to pay attention. Here's the daily chart. You can see that's up at that, at the 0.786 level. It certainly wants to. It's already tested the swing point high, which is September 19th. There's 2.3 million contracts on that trading session. So far today, we've done 844,000. Nonetheless, this thing wants to, it should go test the highs, and it should not only test the highs, but it should take out the highs and complete the larger A to B equals CD up into 1776-ish, 7-ish type range. So that's on the ES Mini. Now, we haven't done here today is take a look at any of the commodities. So let's do that. Let's take a look at Goldilocks and silver. Right now, gold is really traveling sideways. It's down 90 cents. No big deal out here. It has not completed any pattern. There is no real bullish, real signal inside gold as I take a look at it as we speak, specifically right now. This wants to come down and at least test the swing point high of June 28th, or should do that. That's 1234.80. If it can close inside that, that's where it starts to set up potential trouble, because whatever uptrend was in place could end up being a consolidation pattern if, in fact, it gets all the way down to 1179.40, which is the swing point low from June 28th. Now, that's not a bad thing, because it could be quite a wide consolidation out there. But you got to take things one moment at a time. And right now in gold, it looks like it does want some lower price. Silver, what silver did do yesterday, and it is impressive, no question about it, is silver was able to fend off all of that selling, early on. Didn't form any kind of bullish reversal signal. But what it did do, I got to grab some water. Excuse me for a minute. Thank you. Sorry about that. I do like my food. Dust is not one of those food groups that I really care much of. And I think I got a little dust particle in there. So no bullish candle, but boy, a really impressive trading session for silver. It tells us that the bulls are out here trying to exert their energy, and it's just simply that wide. That it's not the bar here. There's no bar. As you can see, the body of the bar out here. But boy, that wick, that lower wick, that big shadow that it's got at the bottom of the bar, what you need to see is several of those. If we were to see several of those, that would be a real bullish sign. One day doesn't win a contest, doesn't win the World Series, doesn't win anything out there. But it is something for us to be paying attention to, and so much so that it actually makes the Gartley pattern, the 0.786 Gartley buy with a nice 1.618 expansion of that B to C swing point to give us that D leg out there at the $19.84 level. That looks really pretty darn nice out there. What you'd really like to see is a spike down, let it get a little bit further, and get down and test the high at 1963 from June 28th out there. But the price channel has held thus far. That, too, is pretty impressive out here. So you'd like to see the pattern complete. You'd like to see a big wide-ranging bar or just a big reversal, big hammer or something that comes in after it gets those tests completed. Again, that's the June 28th, because then it still keeps the uptrend in place out there, and that is on high-ho silver. We take a look at light sweet crude right now. Really just traveling. I should really remove the this consolidation range, or I should expand it. Let's see if I can actually do that live out here. Oh, there we go. So it looks like the consolidation range that we're talking about has just kind of expanded itself here, but slowly but surely, what light sweet crude is doing, in fact, I'm just going to get rid of that. Let's just get rid of that. What light sweet crude is really trying to do here is just get back and prove itself in this longer, a year-long 14-point consolidation range that it broke out of and never came back and tested. And now it seems relatively clear to me that that's what it wants to do. You got the 200-period exponential, 200-day exponential moving average. That's at a price point of about $99.71 right now. So it wants to test that breakout. And if it tests it and it holds, it sets up a run to the 114 type level. That is in light sweet crude, at least coming back and testing that shooting star from August 28th out there. Break back inside the price channel, and that says that light sweet crude will move all the way back down to the $85 range. So looks like that's really where it is targeted. If we take a look at bonds, the 30-year Treasury, today, if we're to close where it is, it's giving us a signal right now because it broke the hammer candle. Thank you, Mr. and Mrs. Hammer out there, because it's a great candle. It tells you that what bonds really want to do then is trade to the lows. Because if you take a look at that hammer candle, it'll trade back or should trade back to its swing point, which says it comes back to the September 6th area. That's if there's a close below that hammer candle. Yesterday was a test. Rejected the hammer candle, closed above. Today you are trading. Let me make sure I got this chart here updated. And it looks like I do. So that's what it is. There we go. I thought I was missing a day out there. So we can see that we have seen two tests of that hammer. Today, right now, that hammer candle is failing, saying that the 30-year actually wants a lower price out there. Natural gas, we covered that with Lou earlier, so we've covered those. Let's go take a look at the ETF structures out here, see what kind of volume we've got inside the move. Let's go over to the daily chart. Grab the wrong tab out there. Inside the daily chart for the SPY, the S&P 500, the SPY, 46 million shares so far as we speak. That is trading inside that high volume bar from September 18th. That's got 203 million shares. We have been trading for a full, hour and 15 minutes or so. So if we do the straight line math out there, that's about 200, 240-ish million shares. So guess what? You're straight into that swing point of September 18th, which, by the way, you're trading that high volume bar, which was your confirmation of an A to B equals C to up, and you're doing it with volume. That's assuming that volume were to remain at this pace. No guarantee that that's going to happen, but that is a positive. That's a bullish sign out there. And the SPY wants to trade to 178.24 out there. That's at least the minimum target. We take a look at the other ETF structures, the Qs. Qs are up and over their most recent swing point. Of course, the Qs confirmed an A to B equals C to up on September the 9th. The 1-to-1 takes us to 82.79. I don't suspect that's where the Qs want to stop. They want to go check out the $85 level. Volume so far today, 13 million shares. The actual now swing point high, I think still, no, I guess it's going to be October the 2nd. That's only got 25 million shares. There are 13 million shares within an hour. The Qs are screaming, we're going to higher price out here. So that's the signal from the Qs. We take a look at the Russell 2000, the IWM. Its A to B equals C to up, 111.98. I suspect 115 is more likely. Its target area, volume in the IWM, the Russell 2000, 10 million shares so far today, taking on a October 1st swing point of 39 million shares. So unless volume falls off of the face of the earth, which it can, you got more volume weighted on the first hour, certainly first half hour, and you do on the last half hour, last hour as well. But so far, volume looks pretty darn good. It's not light volume coming into those areas. And then on the Dow Diamonds out here, that's trading out at 153.24. Volume behind this move, not too bad. 3 million shares here. This is coming. He's going to go tackle the September 18th swing point. That's only got 9.6 million shares out there. Now, it's not near that level, which would be 154.65, so no way to really give a call on that. But volume is pretty nice, and it's up and over the session from October 14th. That has 6 million shares. You've already done 3 million shares for the day. Well, folks, I just call them like they are written in the stock charts out here. Things do seem a bit bullish in the marketplace, don't they? Yeah, they're not just a bit bullish. You go take a look at those weekly charts. We're in the strongest leg since March of 2009. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
182, S&P is up 20. Let's peek around here, take a look at a few things. We had Intel out with earnings after the bell last night. Right now it's trading out at 23.60. It's trying to get over that little doji resistance high from yesterday, which is 23.59. So we're trading right on the number. You've got some pretty, let's see, the volume behind the move here so far, 17 million shares. Really not too shabby at all. The most recent swing point only has 28 million shares. That's up at September 19th. Now, that's really not resistance. Resistance is that little downdraft that took place here on July 18th. But the way I take a look at this here right now, the trend inside Intel is changing. It is changing to the upside. This tells me that what Intel wants to do is go ahead and break over that resistance level. Again, the low is July 17th. The resistance level is the low of July 17th, which is 24.04. If you can get above that, 24.66, I would say 26-ish. In fact, there's another gap down that will probably be a little turbulent, and that's at the June 19th level, around 25 bucks out there. And it looks like that's what Intel wants to do. Now, all that makes sense with the SOX index. Of course, when I switch over here right now, we're going to see the VIX index. And the key number here for the break is going to be a close today below 1566, or tomorrow, whenever it does take place. We see a close below the 50-day exponential moving average. And New York Stock Exchange, let's assume here that the summation index is ticking up. We've been ticking up, ticking down over the last couple of trading sessions. Right now, it's ticking back up, but the trading session hasn't closed here. But you've got that combination with all the other bullishness that truly is trend-wise out in the marketplace, and get below the 50-day exponential moving average, and all things are full speed ahead. Put on your goggles. Go hop on a wing of a airplane because it'll get pretty windy up there, but everything is ahead. Everything is full steam ahead for these markets to power forward. If we take a look also inside this little tab that I've got, I believe I've got the SOX index, so let's go take a look at the SOX. If Intel has been a laggard, as we took a look at, and Intel is one of the top 5 weightings within inside the semiconductor industry, this has broken out of its consolidation. A 43-point move. This says that this wants to move up to about 533 or so. It's only at 500.37 right now. So let's just say there's absolutely nothing bearish about this stock chart. Not at least that I can see. It had a consolidation level, and it's broken that consolidation level. So that's in the case of the stocks out here. Let's go take a look at at least one ETF in the S&P 500, and that's going to be the financial sector. Always good to get a gauge on what's happening inside the weak link inside of the S&P, and that is, oh man, well, okay. So you want another signal? Here it is. This is it for sure. So we're going to take the most bearish reversal signal you can get. It's not really the daily island reversal. It's this one here. Of course, it's the weekly chart. I take a look at all the weekly charts every single day. They're included inside my newsletter in the expanded edition, and that formed a Doji Star abandoned baby top. Extremely hard to even find. I mean, really rare to even find. I've had to take copies of this one just to be able to put it so that I've got it in a workshop here. It is the extremely, extremely bearish pattern. And take a look at what's happening here. Not only is the boat coming aboard to get all those passengers off the island, guess what, folks? It's going to move above that level. It's going to move above resistance. That's in the XLF. That is in the sector within inside the S&P 500 that has had the weakest pattern formation out there. In any event, stay tuned. Basil Chapman is up next. It is Wonderful Wednesday. That means we've got Larry Pesavento, but I don't believe Larry is here, so not sure what we're doing for that show. And then we've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you tomorrow. Take care now.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. At Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.